Hey everyone, we got some great news for Asml stock investors. So in this video, I'll go through the developments and what they could mean for Asml stock investors. So without further ado, let's jump into this stock and look at the latest developments.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Right, ASML said that they finished the year with a solid backlog of 39 billion euros. That's more than 1 year's worth of revenue considering its 2023 revenue. I like companies that have backlogs, right? The companies like Boeing and Raytheon and companies like that have backlog. That means they have so many customers waiting to get their products that they have to wait in line. Not unlike when you go to Starbucks or Disney and you see people waiting in line to experience their products and services. It's a good sign, right? It shows that at current prices, customers value their products so much that they're willing to wait in line to get them. That's good news. I really like to see that. It really makes for an attractive investment when you see customers waiting in line to get the company's products. Moving on, the company says that the semiconductor industry is currently working through the bottom of the cycle. Still, not certain on the shape or slope of the recovery this year, but there are some positive signs in the indicators we have been monitoring. Industry and market inventory levels continue to improve, and they saw very strong order intake in the fourth quarter in support of future demand. So all pointing to good signs for ASML in 2024 and beyond. The semiconductor industry, remember, struggled in late 2022. I would say mid 2022 to all of 2023 after it was kind of rescued by demand from artificial intelligence. Remember, during the pandemic, when people were spending more time at home, there was a surge in demand for electronics that included semiconductors, right? Things like cars and electronics and computers and smartphones and on you could go because people were spending more time at home. They were buying more things, and that was beneficial for all companies in the semiconductor industry. Now, though, when economies reopened and people started spending more of their money on experiences like travel, like restaurants, bars, theme parks, concerts, movie theaters, etc., that was not good news for the semiconductor industry. That hurt sales industry wide, right? So that was coupled with the fact that all of these companies, or most of these companies, were experiencing shortages for the better part of the pandemic, right? They were constantly in shortage of the products that customers wanted. And so they overinvested in inventory because there's a lag time between when they order the inventory and when it actually arrives. And so they overinvested, and when it came time for that inventory to arrive at their warehouse, at their stores, they realized consumer behavior had shifted and consumer demand had decreased. And so they had to work through all of that inventory before they'll order more. So what ASML is saying now is that those companies have worked through those inventories, those backlogs, and now they're seeing strong future demand from those companies that are now reordering because demand is now recovering. And it's not hurtful that AI has really boosted demand. But on top of that, there's that replacement cycle for those products that were purchased in 2020 and 2021. Most of these consumer electronics last for several years. For instance, a personal computer on average lasts between 4 to 6 years, right? So if you bought a computer in 2020, 2024 is when you really start to consider upgrading that computer. And even if you don't do it in 2024, you're more likely to do it in 2025 and even more likely to do it in 2026. Similar story with, let's say, smartphones, right? If you bought a smartphone in 2020, 2021, you're really starting to think about upgrading that smartphone now because it's now 3, 4 years old. Newer technology is really more attractive, and so that's getting people to start to consider upgrading those electronics. So on top of that boom in demand from artificial intelligence is the increase in demand from that replacement cycle from the products that were purchased in 2020 and 2021, and we're seeing that evidenced from what ASML is saying. So the company views 2024 as a transition year in preparation for the expected strong demand in 2025. We therefore continue to make investments this year, both in capacity ramp and in technology, to be ready for the upturn in the cycle. So while management sees 2024 improving slightly, the bigger improvement they see in 2025. So 2024, they're going to be getting ready for that boom in demand for 2025, which is roughly what we've been seeing with other semiconductor companies, other companies that are in this industry. They're seeing similar impacts, right? They're seeing a recovery in 2024, but not very, very strong, right? For instance, Intel said they expect personal computer shipments to increase in the low single digits, right? Something like 1, 2, or 3% recovery in 2024. That's what Intel sees, right? So, but 2025, they see a much stronger recovery. And other companies have said similar things, right? 2024 is going to show that it was bottomed and now they're going back to increase. But 2025 is going to be the year where that replacement cycle, coupled with the demand from artificial intelligence, is really going to create this boom in demand for services like semiconductors. So while they see some positive signs of recovery, they feel it might be too early to change their perhaps conservative view. So management noting there that their forecast for 2024 is conservative. So customers are indicating they are seeing healthy growth this year, primarily driven by AI-related demand both for logic and memory, but also expected from other end markets as inventory levels improve. Remember the inventory correction we talked about earlier. So coming off a very strong year in 2023 with 60% growth in logic revenue, they expect some pause in demand as customers digest the capacity additions while utilization levels improve. So they had a strong year in this segment in 2023, so they expect a pause in this segment. But overall, they're seeing healthy growth from the end markets, and that's going to fuel demand for ASML. That's where they're preparing for 2025. Right now, they see 2024 as a transition year, and so investors can reasonably expect 2025 to be very strong for ASML, and perhaps even 2024 will be better than expected, because management, you saw here, they just hinted that, maybe we're being conservative with our outlook for 2024, our perhaps conservative view. And when management says that they're being conservative, that most likely means they're going to beat expectations, right? They're setting the bar low so that they can beat and exceed expectations. I don't know why companies do this. They like to be, when they report their quarterly earnings, they like for the reports to say that they beat expectations on the top and bottom line. So they set the bar low. I don't tend to play in this game, right? I've said this often on my channel. I don't want companies to be conservative or optimistic. I just want them to tell me what they think is going to be their results for the year. Try to be accurate, not conservative or optimistic. I don't give you bonus points for setting the bar low and then jumping over the bar, right? I don't give you any extra points for doing that. So just tell me what you see and let me be the judge of what's happening with your results. You don't need to beat your expectations or underperform your expectations. I would just like for you to give me numbers and for you to be close to those numbers that you told me you were going to hit. And that way I can be reasonably confident when you tell me a number, that's the number you're going to achieve. That's what I would prefer as an analyst. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.